Good morning. Welcome to today's edition of the Mortgage Rate Forecast with Criss, your residential mortgage market rates and news for March 31st. Let's get to some charts. So as you can see here, we have definitely developed an upward trading channel. We're currently trading this morning at about $102.50. Our support level is coming in right below us at about $102.25. Look at this pattern. Rates better, flattened off, rates got worse. Now they're actually starting to get better again. We have a new resistance level at about $102.70. We are going to need to kind of push through this level right here at $102.50. So this is a little invisible, I should say, resistance. So if we can break through this after the payroll numbers tomorrow, we should be in good shape. So here's our reports. Yellen came out on Tuesday, and this is the reason for the big jump on Tuesday. Yellen came out and said she believes the economy is going to be too weak to increase short-term rates. So that obviously had a great impact on mortgage-backed securities, and we're still developing this upward trading channel. Chicago PMI came out today, did not help the bond market, but with the unemployment numbers that came out today, that kind of countered it. So we aren't seeing any major movement on bonds, but a little bit better today. So here's where we're at. Freddie Mac reported in February the average interest rate to be 3.66% at 0.6 points. So if we quantify that to today, the average consumer should be getting a rate of 3.66, but instead of paying 0.6 points, they may only pay 0.5 points because we're about 10 cents better today than we were on the average in February. So hope that helps quantify this, but we are trading in an upward trading channel. This is good news. As far as the analyst outlook, it's a little inconsistent. Neil is kind of thinking, hey, on the short term, bonds are going to continue to improve, which is like over the next 1 or 2 days. And he thinks he's sticking to a neutral position on long term. So he thinks as bonds continue to trade, they're probably not going to get much better over the next 30 days. Dan Rawich is staying neutral ahead of tomorrow's payroll number, if maybe a little bearish. That's kind of the tone I got. So we have some inconsistent outlooks from the two analysts, but the bias is neutral on the long term. They don't think rates are going to continue to get any better over the next 30 days, but there is a bias that they may improve a little bit over the next couple days. So that's the outlook. Anyway, if you wanted more information, my info is here. Be sure to like the video before you go. I would really appreciate that. And would love to hear from you. Feel free to leave your comments down below. And if it's your first time on the channel, would love to have you subscribe. So hit the subscribe button here and boom, you're done. And you'll get updates a couple times a week. And if none of this made sense to you, it's okay. It's okay. On the top right, you can hit the home button and that will take you to Mortgage Bonds 101, and it'll tell you what you should expect as a consumer when the bonds trade better or worse. So hope that helps, guys. Have a great weekend. Take care. Bye-bye.